The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Of course, I follow two fantastic hours. The first hour is with Steve Rhodes, and 9 o'clock kicks off TFNN's live programming here, and Tom O'Brien and Steve together, and of course they will be in Boston area tomorrow at Burlington Marriott doing their this is their Go Along America tour, and I'm going to be there. I'm going to be coming along. I want to meet as many Tigers, subscribers, friends, callers, whatever. Just it'll be a great opportunity. And the other thing is, I want to thank everyone who came to my webinar the other night, the live free webinar that I gave. All those who signed up, if you had signed up in time, you're able to review it. And I do want to thank you for coming. Just a wonderful surprise, the number of people that were there. And a couple of things that we actually spoke about. What's interesting, I got an email a little while ago from Terry, one of the participants, and he says, "Dear Basil, I was counting peaks on charts. This is new to me, so I wanted to know that after peak D in an uptrend, how many peaks are you expected to get on the way down before resuming the upward move? Where should I buy to go long? Thanks, Terry." Well, I was thinking about that as soon as I got the email. I thought, that's a great question, because it's like this. When you get to a stop street, let's call it a traffic light. And, you know, in the ChapmanWave, the most important thing I'm showing right here, I'll expand this. And I'm showing, if you're looking at Tiger TV, you'll be able to see it. And the most interesting thing is it's the simplest of any technique you could ever find, because from a low bar, most of the identifiable low bar, if there is a buy signal that goes to a buy mode, normally that'll occur. It could occur earlier, but if you have no other technical indicators, it's normally when leg C starts 1 penny above leg peak B. In this case, the low was March of 2009. This is the monthly chart. In April of 2010, it made 11,258.01 as a high. When it gets to 11,258.02, 1 penny, I mean, that's just a fraction of a percent, that starts leg C. Well, that leg C just happened to take you all the way to 12,391. And that was the high of February of 2011, a year ago. And then it went to the high, the May high of 12,876. So now the question is, when you get to peak D, now remember what I emphasized over and over again, and I know it's a tiny point, but it's a really important point. First of all, on the way up, I use capitalized uppercase letters because it just shows the trend. On the way down, I have lowercase. And on the way down, we're not looking at peaks, we're looking at troughs. Those little V-shaped lower bottom, each lower bottom is called a trough. So it's a great question. So I thought of this. When you get to a stoplight, and in the ChapmanWave song, you know, the buy at the low and sell at the high, 4 verses. The third verse is the one that goes, the wave goes to A and then to B, even the anticipated C and D. That's when it flashes a cautionary light. But all you got to do is make your stops real tight. Now that's, you know, I made a song, it sounds like fun and all that, but then the whole thing, this describes the ChapmanWave absolutely. The song does everything that it needs to do. And that verse does everything, because what it says at peak D, you need a cautionary light. It doesn't say get out of everything. It doesn't say buy. It doesn't say sell. It's just, hey, if you're in, take some profits and raise the stop on the rest. Now, on the way down, when you're at that traffic light, and I said to you it was a 4-way crossing, which way is the traffic going to go? There's no real answer. You have to wait to see. People turn left, people turn right. If you're in a main road, the crossroad probably has far less traffic. So the chances are the majority of people are going to continue going in the same direction that they were in. If, of course, it's a small road, a side road, and it's going to the main road, there's a really good chance they're going to turn left or right. If Boston is on the left and Lexington, hey, Lexington, what was I thinking about Lexington last night? Who's from Lexington? Someone's from Lexington. It was very important that I thought of it last night, and then I wanted to mention it today, Lexington, Mass. I'll get to that in a moment. But there's a greater chance that more people are going to make the turn going to the Boston direction. And that's really what we're looking at here in the market. What is the tide? What is the major direction? So the answer to the question is the stock market price point is merely a freeze, a time freeze. If you're looking at a chart that is a historical chart, of a price point of human emotion. The analysis, the technical analysis, is what's going to tell you the major direction. Now listen to this. Oh, thank you, Stephen the Den. Great presentation, Basil. Appreciate your effort. I really enjoyed it. I always enjoy it, but I really enjoyed it because I covered every single thing that I wanted. Of course, there's 1,000 things that I could have covered, but what I wanted to present, I did in that live webinar. Now, this is the issue. When the Dow pulls back, and it pulls back and it pulls back, if you're using technical indicators, which we didn't use the other night, you will have a great deal of information. But if you're looking at things like candles, you remember there was a candle that I spoke of, the Roman candle, ChapmanWave Roman candle, the candle of August of 2011. I said in my work, this is my own invention, the terminology that is the Roman candle, that red candle says that the wick, if you go halfway into the wick, you're bound to test the lower part of the wick and even break it. Well, that's exactly what you did 2 months later, October of 2011. And that's when you got the reversal back above the 9-period exponential moving average. So there are many clues as to when you can turn around to start either a continuation of the buy mode. And at this particular point, I'm considering this is a continuation of this major bull move that we've had from 64.69 to 12,876. The last high was 13,055. So we could pull back. We could even have a major top at this particular point. But what we've done is we've retested successfully in intra-month price last month, the high of 12,876. Now there are many other factors that are involved. How do we close? Can we close two months out of 3 above 12,876? Wanted to get that out the way. Let's just go to right now. Let's go to the numbers, and then we've got callers waiting online already. That's fantastic. Let's go to the Dow, which is down 18 at 12,961. S&P is down 280 at 1371. Comp index is at 2988. Wow, that's fascinating. Gold is down 8 at 1714. I'm considering a rectangle formation is forming. Silver is down 0.86 at 3474. Platinum's down 50 cents at 16.99. Copper is down 1.90. That's a lot, down to 3.90. But hey, this is an interesting phase for copper. Crude oil is down 107.33. Now let me go to the next thing. I do want to take calls, but I need to go through what I had written down, because if I don't look down, I won't do it. Remember I spoke about the dollar? And I said, based on my work, this is the reason why I add my technical indicators. Sometimes I don't need them at all. Remember the fuss I've been making about the 200-period exponential moving average? Where did the dollar index go to? I said 78.10 was the 200-period exponential moving average. There's a left side, right side price time match, which is standard above. So far, that's kind of good. On the 29th, it hit 78.20. Right now, it's a 79.33, a nice extension to the upside. That was the one thing. You remember, I'm almost sure I did it in the webinar. I had so much going on, I just don't remember offhand. But I know I'd spoken about it in the morning. The USO, I said, had made a ChapmanWave peak C, and it could also be in the crude oil an overlapping wave, and that was CLJ 12, and that was that there was a peak B at 104.10 on the 5th of January. You pull back, and underneath that, you had a peak A, and I called it a gray A and a gray B. Let me just change that back again. And I called it a ChapmanWave overlapping wave that said, not only if you break above 104.10 could you have a really powerful move to the upside, but you should still make leg D. We made peak C. Yesterday, I said to subscribers, let's buy, and we've never traded this before. I have once or twice done something with the USO, but never. USO is 100% price of crude. The CO is 200%. I said, let's grab this if we can under 46.83. And did I say at a certain time? You know, I typed it at the very last minute. Yes, with a very tight minus 0.35 stop. And then I'm expecting leg D. I would have written more because I was running out of time or running out of space. I couldn't change anything and something else had happened. Normally what I would say that 1 penny above peak D at 49.38, at 49.39, either take your money off or take a good chunk off and then use trading stop on the rest. I didn't have a chance to do that. I don't have an extra. We don't have, in my service, I don't have a means of giving an update. I've especially done it that way because over the years I've found that most of the time, any intraday update that I have could very well do it the next day, or you've got to think it through clearly to do it beforehand. So we didn't do that. That would have been a 6% gain in one day. However, we did take nice profits this morning, up 40 cents. That's not bad for just a quick trade to leg D. And I wanted to go through that because that covered exactly what we were looking at in the webinar, that peak Cs invariably can go to a peak D. Now, Steve had a chart this morning. I believe it was Steve because I've been looking and working at the same time. I'll say internet troubles that I fix up. Yes, of GCO, which is Genesco Inc. Now, I used to have this all notated, but for some reason it wasn't notated on this chart. It's retail footwear and accessories. Look at that 9-period moving average in the monthly chart. Just fantastic. The MACD is good. The stochastic's good. Footwear has been doing great. Now, the weekly chart. This is very interesting. The weekly chart also walking the 9-period moving average. I have it now in leg F/B, but the technicals are still very strong. This is the point I wanted to make. Peak C should take you to peak D. What happened? It extended yesterday to peak C, and on a Friday, I'm always a little nervous when on a Friday you get a spike to a peak D or an E, because at that point, you've got to be somewhat careful. Look what we did. We spiked up, yet the stochastics at 85%. MACD is very good. This had a spectacular move. I just want to bring out the point of how important the peak D is based on the question. Now, we have Paul, Peter, Jack, and Mike all waiting, and I will not do any more talking after this. We're going straight to the calls as soon as we get back. Guys, hold on. I will be back. Thank you for holding on. Dow's down 16, S&P's down 258. Man, this market is holding up just like it had in some other years. But we might be close to some kind of a rectangle formation. I'll be back straight after these messages.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. This is the Tiger Technicians Hour. Dow's down 11, S&P's down 2. What can I say? It's probably end of the month, beginning of the month buying. It could be anything, but it is remarkable. And I put it down to the VIX, the vol. You can talk about anything you want. That VIX stays in the teens. The buyers are coming in. I mean, just as simple as that. And people keep, I read about it. I heard it on TV this morning. People keep saying how confusing the market is. I just look at the trend line. Don't make it confusing. You break the trend line, you're looking at Tiger TV. Yeah, then you got something else going on. In the meantime, it's in an uptrend until it breaks the uptrend. Oh, yeah. So let's go to our first caller. We've got Paul in Florida. Hi, Paul. How are you?
Hey, Basil. Happy. You were right on the money last week.
Great.
Right on.
Well,
Your prediction that LVS needed it had 3 days left in the month. You wanted to see it test 54 Monday. It didn't do it till Tuesday.
Oh, I'm sorry.
You're 1 day off, but we'll forgive you on that. And then you wanted to see it close at the end of a month. You didn't even say what month. At over the 55.47, we closed at 55.61, and you said that would be a start of I think on the monthly, I think you said it would be the start of a leg D up.
A leg C.
So a leg C?
Yes.
Oh, okay, C to leg D, right, okay.
So I'll explain. I don't know if you're looking at Tiger TV, but I'm showing it right now. Let's go through this, folks. So you are still long, correct?
Oh, yeah, I'm going to be long for a while, yeah.
Oh, okay. So Las Vegas Sands Corporation, they have casino operations, entertainment. I can't remember. They got some game. That's right, casinos and gambling. Las Vegas Sands is now at 56.82 and what it's done, and this is fascinating, what I discussed with Paul were there are a number of patterns, but the most important was that it was walking the 9-period exponential moving average. You know, folks, if you can learn to read that, there was even a divergence in the MACD and the stochastic, and I said, Paul, as long as it's walking that 9 EMA, there's a pattern, a wedge pattern that's occurred with a round number 54. If it takes out that 54 round number high of the 17th of February, not only does it start leg D, but that's very positive. That's number one. Number two is we were looking at the weekly chart, and I said, you know, there's a chance that it gets stuck, and channels, sideways channels tend to do this very often, that as you get to a previous high point of, in this case, 55.47 from November of 2010, that's where it could have a lot of resistance. But if it breaks through, it needs to close 2 out of 3 bars, in this case weeks, to really show that it has the temerity, the strength to actually push even higher. Now, this is brand new leg E/E. Now, I don't have time now. Maybe I'll do it next week sometime. I'll go through what I discussed a little bit in the in my webinar. But basically what happens is I'm giving this the most conservative count, which is E, but then I'm going /C because there could have been a brand new buy mode starting, and that would make this A, B, right now leg C. That's the positive. The negative is that it's a C, but the most important thing is that the stochastic's at 92% and the MACD is still expanding. That, to me, is just so important. Now, as far as the week...
Both on the weekly and the monthly, it looks like there's still room before you hit the 80 on the stochastics.
Correct. And now what's important is that the stochastic and the monthly is at 73%. You've broken out, but the month hasn't, it's just begun, the month now, March. So what's important is I give it a gray letter, which says in the monthly, just like the weekly, you're in a leg. Now I'm going to be the most conservative. One would be negative, because I'd have to call it, it's an extension of the previous high from peak E, that was at 55.47 back in November of 2010, or it's new C, or old F. But there's nothing that we have to do to even worry about that. I've got the notation because I need to know where my GPS is telling me what to look for. But on the other hand, the weekly so far is really positive. I think you have a great position. All I'm going to say to you, if it starts to pull back more than 2 to 3 points, give me a call, and I'm going to explain what could be happening and perhaps how you might want to take something off the table which you could put back again. And that was kind of what I said, is the moment if it breaks and if it gets to that 55-ish area, that's
we were talking about.
Right, that you might want to just raise your stop or take a little bit off that you can always put back. So that's the situation. Right now, yes, we could be in leg D, peak D coming Monday if there's a lower high bar. If the market starts down next week, Las Vegas Sands should probably pull back, but this is tremendous action. Longer term, I think you have a great position play. Thanks for calling in. Thank you so much for the compliments. Let's go straight to Peter in Park City. Hi, Peter. How are you?
Great, Basil. How are you doing today?
Okay. Now I hear the break, and you would like to look at?
Oh, the euro, please.
Great. So we'll be back with Peter in Park City. We're going to look at the euro. There was a kind of a double top C1, C2. I'll also talk about that in the Chapman Wave. We're back with Peter, Jack, Mike, and Mark straight after these messages. Very important messages here at TFNN.com. Hope to see some of you tomorrow.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. This is the Tiger Technicians Hour. Dow's down 13, S&P's down 2. And we're on with Peter in Park City. We're talking about the Euro. This is the EUR USD, the Forex euro-dollar currency pair. And it's right now at 1.320, and it is down 0.01. But the most important thing is that it made a particular a technique that I had developed many years ago, more out of frustration than anything. I always expect a peak D from a buy signal going to a buy mode. Well, when Peter and I were talking recently, the euro went to 3.4855. It missed making leg D by 5 cents. This is now 5 ticks, 0.0005. I mean, that is just minuscule. Should have done it in an eye blink. That gives me a pattern that I developed years ago called C1. That's instead of peak C, it goes C1 and then a fraction, either a double top with no new high or a slightly lower low. And that gives me everything about the stochastic, the MACD, the relative strength index, the unbalanced volume. No, there's no unbalanced volume because I don't have volume here. That straight line would be unbalanced volume, moving up and down if there was volume. That gives me essentially a peak D sell signal. But there's a history to these that says that there should be at some point a higher high to make the D, and in my case, finally break and close above 1.35075, the 200-period exponential moving average. Where do we pull back to? This is the question that we had Terry asking after peak D. Where do you get the buy? Where do you go long? I'm sure that's the question, right?
Yeah, can you hear me?
Yes, I certainly can.
Oh, I'm sorry. Yeah, absolutely. Yeah, no, it's like I'm looking at this and I'm like, okay, I guess the first question is, when would you decide that C2 is the high? At what point, all of a sudden, are you not looking for a potentially new high to D?
That is a great question. Okay. So the question Peter's asking is, could that C2 essentially, I always put a plus sign there. I've now started to actually put a down arrow if the stochastic and MACD do turn down, because those are the criteria that I look for. The real question is, where would it stop? Now, if the market is going to turn down sharply, the VIX is going to go up sharply. I mean, 2 triple-digit down, consecutive digit days down, which says we are going down. Forget about buying because we're going down. I haven't got that signal yet. That would say that the euro is probably going to go down quite a bit more, number one. Number two is the volatility index. I'd be keeping my eye on that. You close above 20.20, somewhere around there. Close, don't just hit it, but you close above that. And I'm saying to you, okay, now you've got to really be careful. There are a lot of stocks that are very overbought. You'd be surprised how many stocks are actually just starting their breakouts now. This is the rotational aspect of this market. Here's my answer. I don't know if you can see the charts right now if you're looking at Tiger TV. I've got a left side price time match, which comes into exactly now. This is 11 o'clock in my 120-minute chart. If the EU, if this currency pair, euro-dollar currency pair, closes under I'll tell you right now, if it closes under 1.317 today or anytime Sunday night, be ready to see our market start to pull back, and you've got to be ready to see the next level of 1.311 and then the low of February the 16th. That's going to be critical in my work. I could do a time price match right now, but let's just say probably Tuesday-ish, somewhere around there. That is where it's going to be really critical for this euro-dollar currency pair to find some kind of support. Otherwise, you've got to be, and that's the 1.279 of the 16th, the week of the 16th of February.
Basil, that's 1.297.
Yeah. 1 point. You're absolutely right. These numbers. Thank goodness I don't trade these. I wouldn't have time to type all those numbers in 1.29. I've done it actually. I do this in the 1 minute and 3 minutes. I would like to practice during the day. I don't actually trade them, but I like them as practice charts. So I try to skip all those extra numbers. Yeah, that's the worst. Thanks for correcting me. So if you close under that, then we're looking at time and price. There could actually be a very big retracement, but then you've got to keep your eye on the dollar. The dollar, if it closes above, if that happens, dollar will close above 80.12, the high of the 16th of February. That's that counterpoint. You've got a buck counterpoint here. You've got the melody going up, and you've got a counterpoint melody going in the other direction. That's exactly what's happening here. So if the dollar breaks and closes decisively above 80.12, I suspect that we're going to be looking at some kind of a timeout in the market. I would not be looking, but I think you've got some time here because how it holds over the period of this afternoon into the close and the market, if the market closes down 65 or so points, and there's a good chance that on Sunday night we might start to see some pullback, you watch that euro. But at this particular point, I don't have a signal other than the one I just mentioned that we were right at that level in the left side, right side price time match in the euro. So that's
the other thing that's interesting. I cleared everything off the chart, and I just started looking at it from scratch, and it looks like we're sitting right here with a potential, rising kind of wedge that could fail at the 131.40 area, maybe.
Well, that's the other thing. But if you look at it in the daily, you could be thinking inverse head and shoulders. But I don't want to do that right now. I need to see that there's some stability in the euro over the coming few hours, actually, into the close, and then Sunday evening. So that's what I'm looking at.
Basil, by the way, thanks so much for your webinar. It was awesome as usual. There's always something to be gained, and it's great.
Oh, I'm thrilled. Thank you for coming. Thank you for being there. And the euro, the USD JPY is in leg E to the upside. So thank you very much for calling, Peter. I appreciate it as always, and good information. Jack in Colorado, how are you doing?
Basil.
You just cut out a little bit. Hi.
Hi, how are you, Basil?
I'm good, thank you. You'd like to look at?
Sam, Nancy, David, X-Ray, Frank.
Okay, we looked at that just recently.
A couple of weeks ago.
Right. And you remember what I was talking to you about? It was just like whatever stock it was we were talking about earlier. I was talking about GCO, I think it was, walking the 9-period exponential moving average. And what I said is, folks, this is not for anybody just listening and tuning in for the first time and saying, oh, great, a stock trading at $1. At the time, I think it was $1.62, right? Something like that. And what we had said was, be very careful with these. I know that Jack looks at these very closely. He studies them. He understands them. So don't just anybody jump in. You're still long, right?
I'm still long. I still have a position, but I've sold most of my position, and now I'm kind of regretting it, it looks like.
No. Don't regret it. You sold it. You made a nice profit. Now, yesterday, it made a peak F in the daily chart. Folks, SNDXF trading at 1.8310. When you see those 4 extra digits after the period, you know this is like a pink sheet stock. It's real easy to get into. Sometimes these are very difficult to get out. You put your price in, nobody even wants them. This does have pretty good. No, it has no volume at all, 131,000. Now, this is not for the faint of heart. Now, in my weekly chart, it's made a leg D, and the daily it's made the peak F. Nice action today. What I always say about this inverted Roman candle that it made yesterday is that if it can close and start to get into halfway, it's at 1.83. If it can get into the 1.8386 area, there's a good chance it could climb. It could try to climb that wick from yesterday. But you've got a position. In this kind of situation, the MACD's turning up, but the stochastic's turning down. I'm going to say to you, I believe you will have another chance to get back the bigger position that you had. Give it a little time. It's nice action day. You've got this extra that's making you more money. It's not like it's losing your money.
Right.
You're not making as much. Keep the position, and on this position, I would say to you that if it fails to take out 1.8775, something like that, by Monday afternoon or Tuesday afternoon, there's a good chance it's going to test 1.711, and that could be the whole week next week makes peak D in the weekly. I think you've got a great trade. You've got out in time. I would actually say to you, you know what? If you made a lot of money, try to keep this position. You can keep it a little longer. Because if it's going to go higher, you do want to have something. And so far, I don't have any signal that says get out.
Yeah, and that's what I was going to ask you. Where do you think this might pull back to if it pulls back?
Well, that's what I was saying.
171?
171 is key. If it breaks under 171, then you're going to be looking at the weekly chart of 1.6 to 1.538. So I would go step by step. Let's see how it pulls back, and maybe call me Wednesday of next week, and then we can have a deeper look at it.
All right, thanks, Basil.
But congratulations, you've had. Don't be upset when the stock goes higher than you thought. You made a lot of money.
No, I'm not. It's just that, you like
to. It is upsetting, I know, but you've still got some position, and that's great. So congratulations.
Right.
Thanks for calling, Jack. Let's go to Mike in Palm Harbor. Thank you. You two have a great weekend. Hi, Mike.
Hi, Basil. Back again with BAC. I'm looking at Monday. Hopefully it's going to keep up on that 30-day pattern and head down again. Well, into the 795 area.
Let's just talk about this because, folks, Mike is called very often. He always talks about the financials, talks about Bank of America. We had discussed it, and I had said the points that he had made, I kind of agreed with the points that he made about the worst probably could be behind it, but I really don't care about that. What I'm looking at is price performance. And even now with the market pulling back, Dow's down 30, S&P's, and this is what I'm talking about, the rotational aspect of this market, which is why I've wanted to be on the long side. Believe me, we've got short positions that we can put on. We will have a short position if certain things happen today. I'm not interested. There'll be plenty of shorts if we're making a top here. It's the longs that you've got to be looking at real closely. And in this case, the XLF, and this is really important, the XLF is at 14.88. It made that pattern. You remember I was talking about this oval pattern, what I call the ChapmanWave stalk leg formation, that if it breaks above 14.87, what's going to happen is it starts another leg, and I won't know the wave count on that other leg, but it is actually, it could make It could be saying, hey, I'm going to make a high-level consolidation. I don't care about the market because my weekly chart is also very positive. So this is what I'm going to say. You are in Bank of America, right? But you would like to add some position?
Well, right now I'm out because I took profits earlier today at 8:20.
Oh,
but
great.
I just think that it's going to hit a shallow valley Monday, just for the mere fact that it's so much movement. I think a lot of people are going to take profits and purposely get out so that they'll have an opportunity to buy more, because I think the general consensus is, and I am very serious when I say I see it returning to the 14 handle.
I don't know about 14. I'm going to go one step at a time, but I would absolutely not disagree with you that it could get back to, it's at 817, that it could get back to the 970 to 1030 area, and that would be the candle of August of last year. Okay, let's just deal with this.
Before it gets there, I'm really looking at that Feb 2nd, that 745 area.
745, 767, 766. Those are the two lows, the most recent lows. I'm going to tell you right now, if Bank of America holds really well today, and it doesn't, if the market, let's say the market does suddenly take a big dive towards the end, and we've noticed we've been having selling towards the end of the day, it's like fund managers are finally taking profits, using rallies to get out. So I'm watching that closely. But I can tell you this, that if Bank of America is up 5 cents now, if it only closes up 1 cent or even just and the Dow is sharply down, I would then say the level that I'm watching for really good support is between 773 and 7. It might just break it by a little bit, is that gap underneath the low bar of 763 of the 3rd of February. I think you took profits at a perfect time. And the other thing is, I would start now in this particular instance to try to keep a little bit on the table even when you take profits off. Why?
Correct. And you know, exactly. And that's what that last caller should do, really.
That's what he did.
If you have faith in something, then it's not going to zero.
Both of you have had really good, your eye on the ball. Congratulations. I think you're absolutely right. Let's talk again Wednesday and see how it does over the first few days of next week. Great.
It's always that long weekend, isn't it, Basil?
Yeah, it'll be long, but you know what?
For the last 4 years, it's always the weekend, you know?
I know you've made money. Have a good rest, and you'll be fresh to start all over again if it pulls back. Thanks for calling, Mike.
Right,
Let's go to Mark in Massachusetts. Hi, Mark. How are you?
Good. How are you?
Very well, thank you.
Are you going to Tom's seminar tomorrow?
I'm going to be there, yes. I at first thought that it'd be a conflict, but everything's worked out, and I'm thrilled that I'm going to be able to come in and meet people and say hi to the wonderful tigers that we have, our wonderful audience.
I met you a couple months ago at MIT. So.
That's right, of course, Mark. Yes, very good.
Yes. The last two calls kind of summarized what I wanted to ask you. What do you think the Dow is going over the next couple weeks, and Dow and the S&P, and Tom's kind of hinted, Tom and Steve, I guess, has hinted that the NASDAQ and particularly Apple has helped prop the market up. And what do you think of all that?
Okay, I can't talk about what they're saying because they really have they have their methodologies. I have mine, and theirs have been successful. Mine's been successful. Let's just do this. We've got a break coming up now. I'm going to try to do a couple of things during the break to show you what I consider to be really important at this particular point, and we'll have enough time to go through it in great detail. So if you hold on, I'm going to go through the Dow and maybe the S&P after we get back from the break. Thank you, everyone, for holding on. Thank you, Mark. Thank you for holding on, because you might have questions. I'll be back.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry, or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. edge. It's the only call you need to make.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Hi everyone, Basil Chapman, and we are right now on with we're on with Mark in Massachusetts, and we're going to talk about the Dow. But first, I want to talk about chart patterns. There's a pattern. This is not the one that I wanted to bring up. It makes a difference. I've got many things in background just going on. This is a chart that has the MACD and the stochastic doubled in time periods. So if it's 26.9, it turns out to be 52.80. You know, all that's double. I'm showing some chart patterns. There's a chart pattern of a stock years ago. I don't remember how long, maybe in the 80s. I think it was Merck made this pattern, and I called it like a caterpillar. And right as I'm typing now, I think, oh my God, I got little grandchildren. I should know this pattern. It's the hungry caterpillar. And it just keeps going up, and everybody thinks, oh my God, this is it. And CMG, Chipotle Mexican Grill, in the daily, and it just keeps going higher and higher and higher. Eventually, when it breaks, everyone says, oh, this is going to just crumble. But in fact, what happens is it makes a kind of a cup formation, and that's the same formation that's made in the apex in a very long rising wedge. The rule, I read it even this morning, somebody said, oh yeah, rising wedges, you go all the way to the bottom. I don't think they've done their homework. What happens is you do pull back, and then there's a very significant point, and there's a rally to retrace. And then it starts to make the move. So it doesn't do anything seriously immediately. So now we've got so many charts that have had spectacular moves. And unless I'm answering the question, Mark, I'm getting there. AZO, which is AutoZone, unless the auto parts companies, unless Ford really starts to break down here, All I can say is, when I'm looking at the Dow, the question, of course, is, yeah, so big deal. It's easy to say we should be having a pullback. I've got this chart up here, and it's got 3 moving averages here. I can't remember exactly. I think it's 7, 14, 20. You can make up your own. It doesn't matter. The fact is that every time that they've all been expanding together, going in the same direction, you do not make a top until they cross negative. Now, that can happen in one day, but this is the way it is. And so far, unless the Dow breaks and closes decisively under 12,890, we are in this moving up to sideways area. So my parameter right now, and which my subscribers will be looking at, there's a certain level in the Dow where we do want to go short. And that's the level that we'll be watching, because my feeling is that even if after that we do have a bounce, that bounce should have very limited upside if we break that level. So this is what I'm looking at. So now let me give you the numbers that I'm looking at on the Dow. On the Dow, the candle of the 27th, which has a low of 12,882, closed decisively under that. The next level to watch will be 12,753. And I'm talking about probably the 12,500s on any major pullback. So 500s, that's a 5% correction. That's what I'm thinking. I will know immediately if there are 3 sharp triple-digit down days after we make a top or to make the top, because that'll say, you're wrong, buddy. We've done that, almost done that in 2 days. We're going much lower. Otherwise, I think there are going to be a lot of buyers waiting. And so unless you smash to the downside, crude oil really breaks out. 105, 106, 107 just breaks out. Wait, it's 107 right now. Let me just quickly check. I can give you the numbers so that this is what we're all, at least I'll be looking at. Oh, I'm sorry. 110 to 112. Crude oil gets to there. This market's going down. But you see, crude oil just made its peak D in the daily. And at a peak D, you can expect a pullback. It's down at 106.67. Don't mess, I say, with these particular indicators. The volatility index is at 17.50, up 24 cents. I have in my work, let me get rid of this particular chart right now, the weekly chart, which says that if we don't really significantly break above the 2177, 2198 highs of February, we could start to make next week, we could have one more rally in the market, and that will be the one to watch. So I'm watching the parameters, 12,880 on the Dow, we start to go lower. And on the upside, you break 1390 and we go higher. Thanks, Mark, for calling.
See you tomorrow.
Hope to see you tomorrow. I'll be there tomorrow. Folks, Nico DeHaan coming up. And then you've got Dave White. Great show this afternoon. Great show coming up. Then Tom O'Brien for...